Moldova, and our guest, Destin, who is co-founder of Stride VC. It's a seed stage VC which invests into a variety of startups, and Fred as well had already a few exits with the unicorn companies like Deliveroo and so on. Great to have you here, Fred.
Nice to see you as well.
So can you tell us about your background and how did you get involved in the VC world?
So I've actually been in venture for this is kind of scary, for 23 years, and for some reason still love it. I think being part of the act of creation alongside founders is something that gives me a lot of joy and a real sense of mission. So I'm still doing it, still not bored with it.
Yeah, great. So did you run any of your own startups before? And I saw you were before partner at Axel.
Yeah, so
how did you get
I
involved?
started in an incubator way back in the bubble days, so when we didn't know what we were doing at all. And so we went up the internet bubble, down the internet bubble, and crashed. And then I found out that I absolutely loved it. So I never thought about Monday morning, and I loved the nature of the job. And so, as you said, I was a partner before at Excel, fairly large firm. You know, we run about 500 million funds, and I love seed because I love the ambiguity and the chaos that comes with seed, and as well the fact that you need to apply creativity across a range of issues. So anything from product design to customer discovery to the brand narrative. And so I decided to start Stride 5 years ago to basically create my own fund. I actually started with Harry Stebbings, who's a famous 20VC podcaster. And so it's kind of funny because I'm in my 40s, Harry at the time was 20, so we started as equal partners together with a guy who's half my age and we're just starting. And you can see Harry's been incredibly successful, but at the time when we started, most people thought we were crazy when we started
Why
out.
crazy?
Well, because it's an unusual mix of you're a super young guy with no investing experience and myself, and so people either loved it because they could see the chemistry between us was good, or thought it was the worst team on the planet. It was quite, you get two very different responses.
Yeah, maybe it's good for the mixing of different ideas.
Exactly. I mean, I think young people know where the future is at. I also thought Harry was an exceptional talent, so for me it was obvious. I met him when he was 19, and he started his podcast from his bedroom with no money, no experience, and he managed one person at a time, to build this beautiful media asset and turn it into something very meaningful. So quite the journey for him.
And how did the idea of starting your own VC fund come to you? And you mentioned that currently you have 120 million pounds under management, and you on purpose make it a smaller fund. So why is it so?
So I started with the thing I don't love about venture capital is there's always this relationship of power related to money. So if I give you money, there's this notion that you now work for me. And instead I thought, wouldn't it be great if we started a fund that was really predicated on very strong trust between the founder and the investor. I think most startups are chaotic by nature, like we never know what's going on, we're always half failing, the journey is really hard, none of us know what we're doing. So I'm like, can we create a forum between founder and investor where we can talk about all the things that are consistently going wrong and burning and failing, and so ground everything on the basis of trust. And the other thing I was fascinated by is, can we step a little bit away from our role as investors and rather be, we're co-creators, so we always grab the whiteboard and we think very creatively from a first principles basis about the type of problems that our companies face. And it could be anything from the actual design of the product experience to the narrative that we're trying to tell the market, to designing the organization, to strategy issues, but come at it with my role model is Rick Rubin, the legendary music producer. And Rick Rubin always says, I know nothing about music, but I know about talent. And I think we're trying to live a little bit with the same mindset, which is what if we assume that we knew nothing about company creation, but we know something about talent? And can we get in the room with founders and kind of help them, essentially make better decisions? And also feel like they're not alone, that somebody's got their back and we can kind of go build together.
So do you think that talent people are the pushing force of the companies, and is it your main criteria when you decide whether to invest into this or that company?
So there's always that debate about whether you back the idea or the people, and the right answer is actually both, which is why this debate can never be solved. I don't think I've ever backed somebody where I didn't think the idea was good, but fundamentally it is for sure about the people. What's interesting is what you're looking for is fast learning metabolism. You kind of need a mix of things. So you need somebody who's unbelievably determined, is willing to believe the unbelievable, because that's what founders do, but at the same time, who's quite self-aware, who can learn really fast, who's open to coaching. I even don't like the word coaching, who's just open to changing themselves. And so you're kind of trying to find the mixture between people who will break through walls, but at the same time are able to think very rationally and almost dispassionately about what they need to build. Because I think the job of the founder is to make decisions in conditions of uncertainty. You know, in startups, you never have good data to make decisions. You have to make decisions very quickly. You have to make them every day. And so the hardest thing about the founder journey is having this ability to constantly make decisions, change direction, hire people, fire people, change the product, and to do this almost in real time. I mean, startups have no resources, no money, no brand, very often no track record. And so the only thing we have is this very fast ability to evolve. And so what we're primarily trying to do is to create an environment where people can evolve very, very quickly and make the right decisions on the fly. And so that's kind of the spirit of it. But you know, we always back founders and ideas, and I think both have to come together. In fact, the beauty of being a small fund is that we don't care about market share, we don't have to write checks, and so we tend to only back people and projects we feel really passionate about. So okay, if we don't feel like we want to be involved with this for 5 to 7 to 10 years, we typically don't invest. It's not just about the returns, it's also whether emotionally we feel like we want the founders to succeed, that we believe in him or her, and in what they're trying to build and how they're trying to create a positive future and sort of trying to impact the world, right? So everything comes into play. And again, that's why I want to stay small, because I'm an artisan, I'm a creative person, and I want to just do fewer things well with people that I believe in.
And are you industry agnostic, or do you have any specific focus?
So I think, first of all, founders are much better at finding white space than investors. So there's nothing more boring than asking VCs what's hot, because we all say the same things, because the trends are kind of obvious. What's surprising is...
I'll probably say that everybody is excited about AI now, but about some other industries, VCs may have different opinions.
Well, I think there's a lot of strategies that work. So I'm a big believer in deeply vertically focused strategies. Say, for example, if you invest in cybersecurity or blockchain for that matter, you know, having a lot of depth is really useful. We are almost the opposite. We're anti-thematic. So we refuse themes, and our job is to be completely open-minded when founders come with ideas that don't look like anything we've seen before. Having said that, we tend to play in the upper part of the stack, so anything that touches the user or the consumer, and it's what we call reinventing the UX of the world. It's basically, how do you create software to interface and interact differently with your core services? It could be finance, could be health, could be education, could be enterprise software, but how do we reinvent the UX of the world, the user experience of the world through software? It's kind of how we think about it.
And from where do you get your deal flow usually?
Deal flow in venture comes from absolutely everywhere, and it's one of the frustration in our job is that we're constantly looking, you know, in all avenues. So we decided to be very deeply focused in London and Paris because we believe in depth of network, and so London is a beautiful hub. It's our home. You know, we're a beautiful old Victorian school which we transformed into an event space and an office, and so we work very deeply within our two local ecosystems, Paris and London. The deal flow comes from absolutely everywhere. Usually the best and the most interesting projects tend to come from other founders. So for us, the primary machine for deal flow is actually our reputation. Let's say we say no to 90% of the people we meet. I mean, VCs are in the business of saying no, maybe 98% of the people we meet. The question is, can they still have a great experience in the process? And I think when they come to see us or we go to see them, usually we try and have a lot of, you know, we're very respectful that they come present their life's work to us. So we try and be very present to what they're trying to build and make sure that every meeting is a two-way meeting. We're not just taking notes and sitting back. We're kind of engaged with them to help them think about the problems they're facing from the first hour, so that, you know, hopefully when they leave the room, they're like, hey, they said no, but what a great experience that was. And then you build reputation over time, reputation compounds, and then little by little, more and more founders are saying, hey, you should make sure you go talk to Stride because they're great for reason X, Y, Z. So I don't think there's any shortcuts to creating that kind of reputation. And then, like everybody else, we use data tools and blah blah blah. So we use scaled up LinkedIn queries and all the stuff that everybody uses, but that's not differentiated because I think every VC firm under the planet has this kind of strategy in place.
Yeah. And you mentioned as well that you invested into a couple of blockchain, Web3 crypto-related startups. So can you say whether you invest personally in crypto yourself?
So I have some personal investments in crypto. I tend to try and limit to avoid conflicts. I do most of our work through the fund. One of the projects we backed in blockchain recently is called DeSci Labs. So it's in the decentralized science space. And effectively we're doing three things. One is we're recreating the research node using blockchain. So instead of publishing a research report like a PDF, you can publish the data, the models, and the research report. The blockchain ensures that it's time-stamped, that the IP is protected, but then people can come play with the data and the models to reproduce science. It's trying to solve the crisis of reproducibility of science. Then we're trying to break open the peer review process using DAOs. So effectively, can we create peer review groups that are organized in DAOs within certain areas of expertise? And then finally, the third leg of the stool would be funding. So actually getting money to fund the research project. So that's one example of something we did in blockchain recently.
And you mentioned as well another investment, Web3 music streaming platform. But
Yeah.
And it's from Sweden, so how many startups from Sweden did you back? You told that you focus mostly on London, Paris.
Yeah, so on occasion we'll do investments outside of our core market. This one's called Another Block, and it's a music NFT project. And effectively what they do is they go to rights owners, whether they're the artists or the producers or the catalog owner, and we allow them to monetize the value of streaming rights. This is very difficult to make work in the long tail because Spotify pays out very little to artists. But this company, which is called Another Block, is purely focused on very high-profile artists. So they started with Rihanna, The Weeknd, and they basically fractionalize ownership of the streams in a specific song that's already a hit. So people, the fans, not only can they interact with the artist in a nice way, but they're buying future revenue streams in the form of streaming rights that are tokenized, and then that itself becomes a tradable asset. It's got some financial value attached to it. So it's really at the intersection of financing music and fandom.
Great. And as well, you invest into Fintech too. So can you tell more about your recent investments?
Sure. So Fintech in general is a great space. In the past, I backed a company called the Currency Cloud, which was building foreign exchange as an API, which Visa bought for $1 billion. My most recent is a company called Favour. And so what we're trying to do is provide instant capital to people building small and medium businesses in the real economy. And so basically what you need to do is to be able to price loans to SMBs in real time using open banking data. And then the way we present the product is through invoice financing. But it's really nice because invoice financing is unregulated, so we can operate very freely in that space. And we can also issue credit decisions on the fly, so literally instantly, which for small and medium businesses is a lot more attractive than anything else that exists. It's also less competitive than all the people working in buy now, pay later, BNPL, or revenue-based finance, because invoice financing has not really been cracked. It's usually a terrible product experience. So here we're trying to make it instant. It's an embedded finance play. It's an API-driven play, and I'm very excited about it.
Yeah, very interesting. I see you like to back the real use case startups which provide the real utility.
Yeah, that's the idea, absolutely.
And on the crypto side, do you invest only into equity or do you invest as well in token projects too?
So holding tokens for funds is not super easy because of both the regulatory setup and then the banking approvals that we need, because it's surprisingly difficult to get like simple fiat bank accounts for funds. I mean, you'd be surprised how tough that is. And so there's a real structural impediment to holding tokens for kind of mainline funds. So we have set up vehicles to do that. It's unwieldy to manage, and I totally understand why some people are just basically setting up dedicated crypto entities so they can hold tokens. So we were able to do it. I know that a number of our competitors can't do it sometimes because the regulator will not allow it. So there are some funds that are blocked from holding crypto assets directly into classic venture capital funds, especially when they're security-like in nature. So when they're equity-like in nature, it's easy. When the tokens are, look like financial instruments, it gets really hard.
And as well, you invested into a couple of unicorns. So what are your advices to the startup founders, how to grow your company and how to lead it to become a unicorn?
So I will tell you that unicorns never look like unicorns at the beginning. So
that's for sure.
I think it's important to remember that Dropbox was two guys in an apartment when I funded Zoopla. So Zoopla ended up being a $3.5 billion company. When I funded it at the beginning, everybody thought the market was too small, and many people told me, "Oh, it could never be worth more than 150 million." So we just focused. I mean, the advice is always the same, which is there is only one way to build companies, which is to be obsessively and myopically focused on your customer needs. If you don't deviate from that, you tend to do well. The second factor of success in early stage companies is radical focus. The thing that systematically makes a company go wrong is to try and do too many things. And in the early days of a company, especially when you're anxious about failing, you tend to want to keep your options open. What you actually really should do is burn the boats, focus hard, and make very radical choices that kind of basically put all your eggs in one basket and bet the farm on that. And human nature is to try and manage risk and to keep your options open if it doesn't really work. And the third thing that kills companies very reliably is talent. So if you're not disciplined, very disciplined about hiring the first 5, 7 to 10 people, I mean, they really do set the tone for the rest of the organization. And very often we just want to get a job done. Like we need an engineer in the seat, we need a product manager. And so founders tend to go for somebody who they feel is good enough. And if you don't keep the bar high on talent, it really hurts. It's like you're compounding difficulty when you start hiring people who are even 7 out of 10s. I mean, you should really try and hire 8, 9s or 10s out of 10s early in the life of a company. And that requires patience, determination. I mean, it's hard to do, but it's such an important factor of success.
And from your experience in your fund, when you invest into startups, what's the percentage of the failed startups and what's the percentage of startups which continue growing?
So the failure rate is lower than people think. It's maybe 1 in 5 that actually fail. There's the vast majority of the portfolio will be in the middle, returning 1-time capital, 2, 3 times capital, maybe sometimes a bit less, but actually the failure rate, at least for us, or for me, has never been as high as what these industry standards that you hear. And I think that's true for a lot of tier 1 funds. And then your returns depend on, say, in your top 5 companies, whether you have 1, 2, or 3 exceptional outcomes will really determine, what kind of multiple you'll achieve. So typically 1 extremely strong multi-billion outcome will lead you to a 3x fund, and then if you can do 2 or 3 of those, then you have exceptional funds on your hands. So it's really a game of what do your top 5 companies look like, and then within that, how many of those are exceptional outcomes. And out of the 25 companies we will back, the question is, can we get into 5 that look like that? Which is why in our case, we're really quite selective, we're really quite slow, we're very deliberate about where we spend the money. And again, there are strategies that work really well, like Seed Camp, where you're much more distributed. And I think that's also a beautiful strategy. It's just not how we work. We're the opposite. We're like super focused, super narrow, and try to be very, very high conviction investors.
And will you invest into failed founders before?
Oh, for sure. Love failed founders.
Can you give some examples when you invested into founders who failed before, but then they grew successful companies?
Let me think. Actually, if I look at my history of great outcomes, I actually can't think of any, so it's a good point you're making. But I don't think we look at failure as any form of, as a negative at all. I think it's a question of understanding the reasons for failure and what people have learned and kind of how reflective they are about their failure and how they've grown. But it's not something we worry about at all. We actually like people with somewhat difficult backgrounds, so school dropouts, people who've had very unusual journeys. They haven't been to a well-known university. Maybe they went to a community college. Maybe they come from a from a tough background. Maybe they made their way on their own. And so we really like people that are a bit quirky like that, because we think very often they've just tried to succeed against the odds from the beginning, and we kind of love that.
And can you share as well what current trends in technologies do you see? What's the next big thing for you?
So, as I told you before, we believe that founders are much better at finding white space than we are. So I always avoid talking about trends because I think my job again is to be receptive and listening to what the market is showing us. We also try and stay away from the hype. So if you look at our portfolio, it's surprising how many things are off thematic or seem quite odd. My latest one is a property management company, actually, which is one of the most boring sectors in the world, which means there are very few startups that go after it, but they found a very unique way to grow, to scale revenues extremely fast. And again, the founder is a Serbian kid. He's 21. He dropped out of school at 14. He built his own business at 16. He built his first successful Facebook app at 17. I mean, it's just really quirky, unusual background, and going after a sector that most people would never go after. So I love these kinds of opportunities. If you look at the mega trends, I think everybody knows them, but I'm very impressed by what's happening in tech bio. So most people associate tech bio with health, but actually there's a lot happening in material science. So next generation leather, next generation chemistry, next generation plastics, and you can see this revolution in tech bio is going to impact absolutely everything. It's not a sector we invest in at all, actually, but I think if I had to pick one that I'm particularly excited about, I think there's a lot coming there.
Yeah, that's quite interesting. Thank you for such informative conversation and sharing your experience with us.
It's my pleasure. It's nice to see you.